Good morning.
Hi,
How are you?
I'm fine. How's SA?
Yeah, it's fine. But you know how it is. We're not sure about our future.
Mm, all right, just typing one thing. I'll be just back in a minute.
Okay.
Oh yeah, oh yeah. Okay. Are you seeing something on the screen?
Nothing.
There's nothing. Man.
There's nothing.
Okay. So mire these technologies.
Yeah.
Did we end up meeting at CITIC that's I mean last month?
No, I was busy. I was busy. So hey, I couldn't come, but I wanted to meet you, but hey, work was tight.
The week was tight.
Mm,
Okay. I'm sure by now you're seeing something.
yeah. Is it those notes that you sent me so I can open mine?
Yeah, they are almost the same, but a little bit different because of when we want to do a lecture, sometimes we stream, we reduce the notes for presentation. There will be a lot of talking than just writing down the notes.
Oh, okay. Okay.
So, my name is Jerry Mutimukulu. That's my name. Um,
Okay.
yes, in this lecture, we are going to look at the introductory tenets of the ACCA taxation paper, which is for the UK variant. That's what we are going to do. We are just going to look at the introductory parts of it. Um, what we will be focused on largely will be on the principles related to this tax system, the administration, and sources of the tax law. All right, and some little bits of
Mhm.
uh, the residence issues because we want to know who is actually going to be taxed and to what extent are they going to be taxed and so forth. Okay. And lastly,
Okay.
we'll talk on professional ethics, just a little bit of it. All right. You will see that in as much as we might say it's an introductory topic, you will see that it is actually constituting almost everything we need for us to succeed in this paper.
Okay.
So if you miss the main points in this week one topic, then it means that you struggle to understand what will be going on. And the majority of the section A questions, the multiple choice questions, actually centered on this first week task. So it is a very, very important topic to consider. All right.
Okay.
Uh, what we are going to do is we are going to uh, do. Actually, I'm going to be your tutor for the full paper. Yeah, for this whole paper. Uh, we are not going to. You're not going to have another tutor. That's my hope, because the rest of the guys are a little bit busy. All right. Now, for you to master this, where I've found it very, very pertinent that we just have to do a step by step, to adopt a step by step approach so that nobody is going to be left behind. In my previous videos, I was a little bit hurried. And a lot
Okay.
of guys were complaining that, hey man, you're too fast and this and that. So I hope I'll give you all the explanations you need. Please don't be shy to ask me questions where I do not know. I will tell you that I will research on that part so that I don't give you poison. Exactly.
So,
Say,
Mr. Mutumkulu, students are different. I think it's nowadays we don't have so much time. So pace plus I wrote this paper before. It's a repeat. So a little bit of pace is not a problem with me because I got 49 the last time I wrote it. So it's not like I know, but if we finish early, we do so much revision then. Because that time I didn't do revision. I was doing with these guys from Pakistan, so I just used their videos and did I think two revision classes. But for now, I would want us to maybe do move fast. Then when I'm revising, when I have problems, I come to you. Look I saw this question. I need help here. How do I don't know if you understand me.
it's okay, that's fine. That's fine. So let us just jump into it. All right. So by the end of this lecture, you should be able to explain the purpose of taxation, which is very, very important. Uh,
Hmm.
yeah,
Yeah.
you should be able to explain the purpose. Why do we levy tax, or why do governments levy tax? And in particular, the UK government, why do they do that? Then you should also explain or be able to distinguish between progressive, proportional, and regressive tax systems. Because sometimes the examiner would ask you which of the following are
Hello.
Patrick.
Yes. The reception is bad, isn't it?
Yeah, the network. There was a call actually, and you see, because I'm hotspotting here, so the moment a call enters, there is going to be some interruption. I do not know. Maybe it's part of the settings of my phone. I do not know. Um,
Okay.
I'm sorry for that. So there are
It's okay.
three. Yeah, there are three different tax systems. There is progressive tax system, proportional, and regressive. So, like I was saying, the examiner might be interested in you pinpointing which of the uh, tax varieties he would have given you falls under each of these tax systems. So you should be able to actually categorize accordingly. Uh,
Okay.
the second objective is that you should be able to identify the main UK taxes, uh, distinguish between direct and indirect taxes, and explain who pays each tax. All right, so here we are actually looking at what taxes in particular. All right, be they falling under, remember, they might be falling under progressive, proportional, or regressive systems, but which are they? Which ones are they? We've got the income tax, we've got the VAT, we've got the CGT, inheritance tax, all those things. I'm sure you are aware of them since you are saying it's a part of the receipt component. Okay. Um, you also have to explain, you must be able to explain sources of UK tax law and evaluate the roles of legislation, case law, and HMRC guidance in tax practice. All right. Then
Okay.
differentiate between tax avoidance and tax evasion while applying ACCA's ethical principles and professional responsibilities. Like I said, we cannot divorce. you away from the aspect of ethical behavior, ethical principles. So in everything you are going to do, be it you're an account clerk and a finance officer or manager or even the FD, you are always going to be guided by ethical principles in everything you are doing. Number 5, you should be able to apply the statutory residence test and the sufficient ties test to determine an individual's UK tax residence. So by the end of this lecture, obviously, all these things will be at your fingertips. Then, lastly, you must be able to apply the knowledge to solve ACCA TX-UK multiple choice and scenario-based questions with confidence. So these are our objectives. Do you have any, questions?
I don't have any questions for now.
Okay, let's jump in. Now, the purpose of taxation. There are two main purposes. We'll be looking at the aspect of economic control. Taxation and spending influence national inflation, employment, and trade balance. How does taxation influence national inflation? From your own understanding, from your basic understanding, how does it influence? Uh,
If with high taxation, so if let me think.
right. We all know that inflation basically it has to do with the the abundance of a certain variable. All right. So
Mhm.
if there is so much money in the economy,
Mhm.
prices prices of commodities tend to what? To rise. Do you understand?
Yeah.
Because inflation by its definition is the frequent increases in commodity prices. You understand? So if
Mm-hmm.
people have got so much money, if people have got so much money, prices of goods and services tend to rise. So the government can indirectly influence that behavior, the price behavior of commodities by levying taxes on the incomes of individuals. So if the taxes increase, it means that the money in the economy is going to reduce. Why? Because the people's incomes would have been reduced. Is that clear, sir? So
Yeah.
if people are paying more taxes, it means that they will be left with very few rands or dollars in their pockets. And by so doing,
Okay.
the prices of commodities or the prices of goods and services are going to reduce. Is that clear? So in a way,
Yeah.
taxation is being done to regulate the prices. Remember, when the prices of the goods and services are so unbearable, it reduces the competitiveness of the economy, and people won't buy goods from that country. Why? Because in general they are expensive. So governments do not want that. They want to attract foreign direct investment and so forth. So by the end of the day, they have to regulate the prices in general. All right.
Okay.
The aspect of employment. To some extent, if governments levy taxes again, they would want to have more money in their purse. Okay, they want to have more money in the treasury. And by having more money in the treasury, it means that the government will be able to create more jobs if it has got more money. It will create more jobs for the youth,
Yeah.
more jobs, and so forth. So by the end of the day, they will be creating employment. Then the aspect of trade balance. Trade balance here, we are simply saying that we want to distribute wealth. Okay, they do it by distributing the wealth. The people who are earning more will to some extent pay more taxes, and in a way, there is going to be some balance there is not going to be that large difference between the rich and the poor. There is going to be some, to some extent, we are able to stay together in the same economy, isn't it?
Yes, yeah.
Yeah, that's the idea. So, taxation actively drives positive individual or business actions. Now, there are some aspects of ISAs. These ISAs, you are going to meet them very often, often in this particular paper. The ISA, that is the individual savings account incentives, where the UK government allows individuals to earn income which is tax exempt. You're not going to be charged tax on ISAs, on interest from an ISA. You understand? Because
Okay. Yeah.
remember, uh, you are charged tax on income. You understand? Not on the
Mm-hmm.
capital injection. So when you put money in an ISA account, when the examiner says which one is going to be taxed, it is not actually the balance you have put in the bank, all right, but it is
Mm-hmm.
the interest you earn from that deposit. That's the income, not the money which you deposited. Yes, it's still your money, but you're not going to be charged tax on that money, but you'll be charged tax on the interest income. So here they are saying in the UK, if you put money in an ISA account, an individual savings account, you are not going to be charged tax on it. That the income there, the from that interest is going to be tax exempt. However, there is a threshold of how much you are going to, deposit in that account, because people might end up, if there was no threshold, somebody would put 1 million in an ISA account. They say the interest I'm going to get here is not going to be charged tax. No, there's the threshold, not everything. Is that clear?
Clear.
Then there is the gift aid scheme. The gift aid scheme, I'm sure you have seen this one. This encourages charitable donations. You will see as you proceed how these gift aid schemes are helping taxpayers to reduce their tax burden. All right. So it is done to encourage charitable donations. Then, lastly, we have got the electric vehicles relief, the EV reliefs. These ones are done to promote carbon neutral motoring, right? To increase, our appreciation of the need for reduced carbon emissions and so forth. So the government offers, if you buy an electric vehicle, obviously you're not going, you're not going to pay taxes which are related to carbon emissions and so forth. You see that one as we compute the income taxes. Then behavioral modifications. Taxation system actively penalizes and discourages activities deemed socially and environmentally damaging via specific duties. For example, there are fuel duties, which discourages the use of traditional, motoring energies using petrol and diesel. It is being discouraged. So you see that petrol and diesel are always going to be on the higher side because of the fuel duty. The import duties which are levied on fuel, or the taxes which are going to be levied on fuel. So this is why these energy, sources are always on the higher side. Then there is what is called sin tax or sin taxes. There are high duties on tobacco and alcohol. Right. Smoking is very, very expensive in the UK. All right.
Yeah.
They want to discourage it because it's not good for our health, isn't it?
Yeah.
Green levies. So carbon charges linked to emissions. So because they want a greener economy, they are always going to charge taxes on everything that emits carbon. Is that clear? So, in a way, taxes
Yeah.
are also meant to modify the behavior of the agents in an economy. Because if alcohol is expensive through the taxes, they would have a positive impact in the longer term where the consumption of alcohol is going to be less desirable. You understand?
Okay.
Now, social justice and tax principles. Here we are looking at those tax systems. What is progressive taxation? Here we are saying as incomes rise, the overall proportion of taxes increases. So if you earn more, obviously you are going to pay more. If you earn less, you're likely to pay less. So it is
Okay.
designed to capture higher tax rates on larger financial gains. And an example of a progressive tax regime is the income tax, the UK income tax, right? Income taxes or taxes levied on individuals' incomes, all right? When you go to
Yeah.
the tax bands, you see that those who are earning more, because we have got three categories. We have got the basic rate tax band, the basic rate tax band. I do not have my pen here, so all right. These ones they pay something like 20%. Is it 20%? The basic rate? Do you still remember?
Yeah. It's
Then we have
20%.
got the higher rate. How much do they pay?
45.
Higher rate.
30,
Isn't
33.
it? Isn't it 30 something?
33. If I'm not mistaken.
There is an additional
45
rate,
is the
right?
last name. 45 is the last one. Eh?
45 is the last, right?
Higher
The additional rate taxpayers. Additional rates,
additional.
these ones are the 45 that. So,
Mhm.
yes, this one is your homework. I want you to send me
Okay.
on how much the higher rate pay. Okay,
Okay.
that's your homework. I don't
Okay.
think it's not 33. It's not 33, but it's somewhere around there. If it's not 35, then I want you to give me the actual rate there.
Okay.
Okay, so this is progressive because you see that the additional rate guys are the guys who earn more, usually above the 120 £5,000. You know, they actually above 100,000. They earn more. Okay. Then there is regressive. As income rises, the proportion of tax paid falls relative to the total income. So when individuals have got more, they are going to pay less in this regime.
Okay.
All right. So fuel duties represent a greater relative cost for lower earners. Also, an example here is the VAT. If we look at the VAT which is levied on a product, so you see that somebody who earns, let's say, £1,000 is going to pay the same amount of VAT, and which to him, in percentage terms, would be more. And then when somebody comes who earns 100,000, he is also going to pay the same amount of VAT. So you see that the richer are going to pay less. The more you get, the more income you get, the lesser tax you are going to pay. Why? Because in aggregate terms, you are paying very, very little. Let's say, for example, we paid VAT of $2. The amount of VAT we paid was, if I use dollars, I'm sure you're not going to be confused, but let me just say use pounds. Let me use pounds because this is a pound paper. So the VAT we are going to pay is £2, but somebody is earning 20,000. Okay, somebody is earning 20,000. £20,000 and somebody is earning £1,000. Sorry, it's just 1K. Let me just say 1K. Somebody is earning 1K. Now, in percentage terms, if we say 2/20, you see that if we say 2/20, you see that the percentage here or the fraction is going to be very, very small, isn't it?
Mm-hmm.
But if we say that's 2/1, this again is going to actually show that this guy is paying 200% more tax than the one who has got the 20,000 pounds of income. So as a percentage of income, you will see that this guy who is earning less is paying more tax than the guys who have got more income. So that tax regime is regressive.
Okay.
Then we move on to the proportional. The proportional here, we are simply saying that the rate remains constant regardless of size of or total value, also known as a flat tax regime. A flat 10% rate on all earnings. So if you are earning 1,000, you are still going to pay 10% of 1,000. If you are earning 1 million, you are still going to pay 10% of the million. So the amount of pain each of the individuals is going to feel is the same. Why? Because the rate is flat. There is no advantage if you earn more or if you earn less. That's the proportional tax regime. But this one is not really, really common, but it is there.
Okay.
All right. Now, the examinable UK taxes. Remember, we said that one of our objectives is for us to appreciate the main taxes which apply in the UK. So we have got the income tax as our first category. This one is payable by individuals. The basis of assessment here is earnings. Uh, how much do you get? Your earnings, your salary. That's the main the main source of of the income. So the earnings from self-employment or from employment itself or from your investments. Sometimes if you put money in a bank, you are going to be taxed on your I mean as income tax in the bank or through some deposits in certain companies. I mean, some shares in companies. So you are also going to be taxed on the dividend income. So there's dividend income, there is savings income, there is also so the dividend and savings, they are part of investments, isn't it? Then there is that income that is non-savings income from self-employment or employment.
Mm-hmm.
Sometimes we need to talk of property income as well. It is also taxed under the income taxes.
Okay.
Are we together?
Yeah.
Then there are now national insurance contributions, the NICs. These are payable by employees, the self-employed, and employers. The basis of assessment here is that is employment, self-employment, and income. Please bear this in mind. Then the CGT, capital gains.
Sorry. Can I ask something? What is the reason for paying this NICS,
All
the
right,
national insurance? The
they are like NASA in Zimbabwe. It's NASA. I don't know.
Oh,
You
okay.
understand?
Okay. Yeah.
National, social security, those things, they are related to your pensions and something like that.
Yeah, I get it.
Okay. Then capital gains tax CGT. These ones are paid by individuals. The basis of our point of assessment when you dispose of a capital asset, for example, land, shares, etc., the profits you make are going to be chargeable for CGT. Okay, disposal profits of capital assets, where we are looking at land, the land. If you sell land, if you sell shares, etc., you attract CGT. Then inheritance tax, IHT. This one is payable by personal representatives, usually of the deceased, of course. Somebody would have died, or even during your lifetime, you are going to pay this. You see as the as we proceed with this, module. All right, and then value. The basis of assessment is the value of deceased estate and certain lifetime gifts. This is why I said even during your lifetime, it is payable. So that one will founding out to be bad, right? All right.
One.
Then corporation tax. This one now. You discover this is where we have got the UK as the most unique case. Corporation tax would incorporate the income tax, the CGT for companies. It is one tax. All right. It combines the income tax components as well as the CGT components into one place. So don't think that when we are now doing corporation tax, certain chargeable gains, if the company sold the land, there are some chargeable gains attached to that. You understand? But you do not have to say that will be CGT. It is still corporation tax because the corporation tax itself incorporates the CGT elements, also incorporates the income tax, uh, you know, uh, components. You understand? But it won't be income tax. You do not compute income tax for a company. You do not compute CGT for a company. What you will be computing is still corporation tax. Although to some extent you'll be following certain rules which are almost similar to those guys, but it is within the corporation tax component. Are we together?
Okay.
You do
Yeah.
not calculate CGT for a company. You do not calculate income tax for a company. You only calculate corporation tax.
Okay.
So corporation tax is only payable by companies. Basis of our assessment, corporate income profits and capital gains. Are we together?
Yeah.
Please. Then lastly, we are going to cover value added tax. This one is payable by the final consumer. It is collected via suppliers on supply of goods or services. So basically, this is our syllabus. This is our journey. This is our journey.
Yeah.
If you can master this, then you have passed. That's our journey.
Yeah. I see the way you have explained it to me. I understand text now. It's very different than I thought. It's to understand.
But
Was all over the place, but now ndakuziva kuti zvinobva neuku zvinoenda neuku izvi zvakadai. You are right pamataura kuti ukangounderstanda ipapo kuti tinofamba sei nekudii nekudii. I've got a better picture.
better now. Thanks. Now, direct versus indirect taxes. This one is very important as well because it gives us a clearer direction of how we should treat these taxes. So, direct taxation is paid directly from the taxpayer to the HMRC. When you are talking of a direct tax, this one, the taxpayer himself pays directly to the HMRC. without any intermediaries. Direct taxes are calculated based on personal wealth, income, and gains. For example, the revenue basis, income tax and corporation tax. These ones are example of direct taxes. Why? Because the taxpayer is directly remitting those taxes to the HMRC. What is HMRC?
Mm-hmm.
Do you know these
Her
guys?
Majesty Revenue and Customs.
Yes, those are the guys in the UK who collect these taxes. So income tax is a direct tax. Corporation tax is a direct tax. Why? Because the company itself is paying directly to the HMRC. The individuals for income tax are paying directly. So an example of an income tax, that's the payee for your salary. You pay directly as you earn to the HMRC. Okay. Uh, Capital basis, capital gains, tax. So, okay, here only the revenue and capital. Well, what we are simply saying here is that if we are saying revenue basis, we are talking of income. There is the income component from your earnings, all right? So you are paying directly on your incomes. Also, when we are talking of capital, we are simply saying this income uh, is from non-services, is from certain capital assets. We are talking of certain capital assets, which we said their land, shares, and so forth. All right. Also, the inheritance, we are talking of the estate of the deceased, isn't it?
Mm-hmm.
So they are considered capital basis. That type of income has got some capital attributes. Is that clear?
Yeah.
Then we then move to the indirect taxation. Like I said, here now, the taxpayer is not directly paying the taxes, but through the consumption of goods, he is going to end up paying taxes. Although he is not the one who is responsible for remitting the tax to the HMRC. For example, VAT. You buy a
Yeah.
certain good or something, a product from a shop, you are paying VAT, but you are not the one who is going to remit that VAT to HMRC. It is the person who is selling that commodity who is responsible for remitting it. So the
Okay.
end consumer bears the tax cost while the businesses administers it. So you are paying the tax, but it is the business that has forced you to pay the tax that is going to remit it to the HMRC. Now, we have got sources
Okay.
of law which are very, very diverse in the UK. We have got what are called statutes. There is statute law or statutory law. Statute
Mm-hmm.
law. So, this is an act of parliament. That's the primary legislation. Primary in the sense that this is the core. All right, this is the core. Adherence to it is mandatory. So, if the Finance Act says that you need to pay tax at 25%, there is no way, even if you see another publication that tells you or that smooth talks you that you can pay as you wish, please do not follow that. Follow the statute. The statute is mandatory. Major updates occur annually in the Finance Act based on the budget proposal. So you see that there are certain laws which are there. For example, the Income Tax Act would have been enacted maybe a long time ago, but to operationalize the income tax, they have got what is called the Finance Act, which is uh, actually published annually. It gives us the updates of tax changes, the tax brackets, all the tax rates to be applied, and so forth. All those are done in the Finance Act, which is also going to be based on the budget proposal. Exactly. So this one is common in many
Yeah.
jurisdictions. Even in South Africa, I'm sure they also do that. In Zimbabwe, they are doing that. Um, the case law. Case laws. These ones are binding court decisions, resolving legislative ambiguity. Sometimes a legislation, this statutory law might be there, but it might be ambiguous. So when the courts now try to settle matters, they normally also uh, rely upon decided cases, old cases, the rulings which were done before, to say what were they saying, what was the conclusion, what was the determination by the court in those areas. So these rulings interpret statutes and direct future application. So they are very, very important. They are also considered a source of the law. Then they are what are called HMRC guidance. These ones are non-binding but provide critical, practical notes, statements of practice, the extra statutory concessions, and staff manuals. I'm sure we can discuss them here. The statement of practice, these ones explain HMRC's interpretation of tax law. All right. They
Okay.
clarify how tax rules should be applied in practice. This is where usually students or actually examiners or even tutors get most of the methodologies in the computations of taxes. As you shall see as we proceed, this is these are the things. I mean, the sources we use to ensure that we come up with the right figures in our computations. Okay, so
Okay.
they guide practitioners on how to compute these taxes. Then extra statutory concessions, ESCs, these ones relax the strict application of tax law in specific circumstances, used by HMRC to ensure fairness and effective tax administration, cannot override the clear wording of legislation. They apply a more favorable interpretation of tax law to avoid hardship, unfairness, or illogical outcomes. They are published by HMRC and can be relied upon by eligible taxpayers, not everybody. Government policy is to
Okay.
eventually withdraw these ESCs or incorporate them into legislation. So, what the statement is saying is that they there is a certain time when the taxman would feel it not logical to apply certain tax provisions, and they then end up, having some mercy to certain eligible individuals. All right, but remember, the objective of doing so would be to avoid hardship, uh, to
Mm.
also in the process, because they don't want to be corrupt, they would want to be fair. So they would want to remove the unfairness in the application of the legislation, or to remove illogical outcomes. Sometimes the outcomes or the intended goals of the legislation would not be logical. So they would do such things to ensure that the outcomes are fair, are logical, and so forth. Is that clear? So
Yeah.
don't say
Yeah.
that they will be doing that one to favor other people. They won't be doing it to favor other people.
Okay.
Okay. Then, lastly, there are what are called internal HMRC manuals. These ones now are used to guide the HMRC staff itself when it interprets law. So they are publicly available for reference, so that when the taxman comes to you and does his computations for duty, for duties, for whatever, for import quotas, for all those tax computations, you would be also in the know as to whether they are doing it right or wrong. So the manuals assist them to do the computations in a fair and accurate manner. Is that clear?
Yeah.
Good. There are so many, but we are now left with these two. The HMRC website, leaflets and booklets. So when you go to the HMRC website, you're going to see certain general notices and so forth, which are written for public consumption. They explain tax issues in simple, non-technical language so that we understand. Lastly, detailed technical guidance. These ones are notices and guidance notes. They provide detailed technical explanations for tax agents and advisors. Also, here the tutors are also assisted. Even students are also assisted with this one because you will know how to maneuver each particular tax terrain. HMRC briefs, they offer technical guidance on specific tax issues arising during the year. So all these can come in your multiple choice questions, and you should be very, very comfortable to understand them. All right,
Okay.
let us now talk of these issues. They are also very, very, very important for us. Um, Evasion versus avoidance. That's what is called tax evasion and tax avoidance. So, tax evasion is illegal. Here, you are trying to reduce the tax liability via deliberate illegal means, such as suppressing earnings or falsifying bills. Uh, for example, you might be having a bill that has got £7, which should be refundable from the HMRC, but you end up altering it or falsifying it to £7,000 so that you get a larger refund from HMRC. That one is also an example of tax evasion. This carries extreme penalties, prosecution, and jail term. So do not try. Do not try. Tax avoidance. This one is illegal. This one is legal. Is allowable. Is actually allowed by the taxman. You can avoid taxes. But remember, do not aggressively avoid tax. Okay? Yeah, there are some people who are so
Yeah.
crude, who are so determined to avoid tax at all cost. Please, when the taxman sees that you were so aggressive, he might be interested in auditing your books. So, legal minimization using tax planning tools such as ISAs, which we have talked about. However, abusive loophole schemes are strictly blocked by the general anti-abuse rule. Please be careful, right?
Yeah, I will be.
Okay, now a touch on professional ethics, the ACCA professional code. You need to memorize this, but I know by this level, at this stage, you could have met these things, the OPIC, over and over the study journey so far. You have met them quite often, isn't it? All right.
Yeah, many times.
Okay. OPIC is just an acronym um, which stands for the fundamental ethical principles, right? We have got objectivity, where we are saying that members must be objective. They must remain free of bias. Okay? Personal conflict of
Yeah.
interest. You should be free of bias, personal conflict of interest, or unfair external influence in your assessments. So the word assessment here, when it comes to tax, we are talking of tax assessment. Even when you are doing the work of your client, when you are assessing their tax position, please always be objective. If you are doing auditing work, tax audit, please be objective in your work. Whether you are a member of the HMRC, okay, you work as a staffer, as a staff of the HMRC, or you are working as a consultant, or you are working as a tax accountant, please be objective in your assessment of the client's tax position. Is that clear?
Yeah.
Good. Professional competence and due care. You need to ensure ongoing ongoing education to ensure that you keep your technical tax knowledge up to date and maintain diligence. So it is your duty to ensure that you have got this attitude towards ongoing educational development. You must not tell yourself that I have known enough and I'm now fine. You need to keep on doing or upgrade yourself. Need to keep on upgrading, keep on updating, keep on ensuring that you are always up to the grips with the tax knowledge required to do your work. Remember, we are doing a tax subject, but these ones are always common when you are doing financial accounting. You are always going to meet these professional codes. When you are doing auditing, the audit paper, they're always going to be there. Financial reporting paper, financial management, the ethics are always going to be there. But because we are talking of tax, this is why we are saying you need to ensure that your tax knowledge is always up to date. If it is auditing, we will say you need to ensure that your auditing knowledge is up to date. Are we together?
Yeah.
Also, on this same principle, on this fundamental principle, where you see that you do not have enough knowledge to exercise discretion, when you see that you do not have enough knowledge to do the assessment, you do not have knowledge to do the computation, please tell the client honestly that they should ask somebody else, or they should consider hiring an external expert, or they should allow you to consult further on that. Do not do what you can't do. Is that clear? Hello?
Yeah, it's clear. Yeah, it's clear.
Good. Professional behavior. You must avoid any actions. Avoid any or conduct. Actions or conduct that might discredit the reputation of the accounting profession. So, in as much as we are doing a tax subject, but here the principle is actually saying accounting profession as a whole. So, whether you are doing your tax issues and so forth, by the end of the day, if you do something bad that side, you are going to put the accounting profession to disrepute. So, please, whatever you're going to do, make sure your actions are not going to put the accounting profession to disrepute. Integrity. Members should act with absolute honesty, transparency, and straightforwardness across all professional relationships. So, everything you're going to do at your work, please exhibit the highest level of integrity. That is, you should be honest. You will discover that if you tell people that you are actually being honest. Okay, when you
Yeah.
determine that there was a loss, you are preparing management accounts and you are seeing that there is a loss by the end of the day, please be honest to produce that statement. Do not, greenwash or whitewash it. Just produce
Okay. Okay.
what is there, what is supported by the evidence you have obtained. You also need to be transparent. No backside transactions, no hiding of transactions. Just be straightforward, straight to the point, be transparent. Everything you do should be above board, clearly and understandable. All those things. That's integrity. Lastly, we talk of confidentiality. You need to protect client data unless legal or professional disclosure is required, such as for money laundering. Sometimes you have to disclose outside the organization. But that disclosure should be in the knowledge of your client, unless doing so is prohibited by legislation. For example, in money laundering issues, uh, if you tell your client that you are going to report the money laundering, obviously you are tipping off your client, and that is also going to be a crime on you, against you. So if you tip your clients, then you'll be in for it. So this is when you are allowed to disclose without them knowing. Is that clear? Hello?
Hello. Something had
What
happened
is
with the
that?
network. We are back online now.
Oh, you're back now.
Yeah.
Okay. All right. It's fine. So I'm sure we have covered everything here. Do you have any questions on this?
Yeah, nah, we don't have any question.
All right. Dealing with client irregularities. Sometimes the road is not going to be as smooth as we expect. Some clients are rogue clients. They want to be following the rules. They love, shortcuts and so forth. They deal in illegal money dealings. So here are the ways you need to deal with them. So let us look at the action plan on errors. Sometimes you found that their tax treatments are erroneous. What are you going to do? What are you going to do in that situation? If a client makes an error or leaves out taxable revenue, you need to discuss the matter and insist they notify HMRC immediately. So you need to discuss with the client. Kuti taona ma errors.
Okay.
Please, madi mabata vanhu veZimra, madi mabata vanhu veSARS, madi mabata vanhu veHMRC, so that nyaya iyi igadzirike. So you discuss with the client. Then, if they refuse, sometimes they might tell you, iyo mfane, ziva zvokuita mabhooks wakanyarara ikoko. Or, they might say, a whole lot of things. So if they refuse, you must cease acting for them in writing. You write them a letter that I am leaving. I know mabasa ari kunetsa.
Mhm.
But ndozviripo mudhara kuti
Tama
mabasa
one.
ndozviripo. So the ACCA is
Nah,
very, yeah, the ACCA is very, very strict on that position. If your client is unethical, they are refusing to abide with the laws, please cease acting. But how do you cease? You have to put your resignation in writing. After that, do not go to the bar and drink. And drink your mind out. Yeah, because some of you guys, when they leave jobs, they just go to straight to the bar and ensure that they've drank themselves out. No, you need to notify HMRC of your resignation, but do not
Okay.
explain the secret reason why. Do you understand?
Okay. Okay.
Yeah, because you were the accountant, you have been doing their taxes and so forth, but all of a sudden they are no longer receiving the taxes. If you do not approach, notify HMRC, the HMRC will actually pounce on you, the accountant. Because the client will
Okay.
simply say,
Okay.
remember, the client will simply say, I know, we thought the accountant was doing it. Even if you left, you know, say, so you need to tell the guy that I'm no longer the accountant there.
Okay. I get it.
Do you get it? So after you
Yeah.
resign, you tell the HMRC, I have resigned, but do not tell them the reason why you have resigned, because the moment you tell them the reason, that's you are breaching the confidentiality principle. However, in
Okay.
money laundering now, in money laundering rules. Handling and concealing proceeds of crime, that's money laundering. Okay, money laundering is handling and concealing proceeds of crime. Firms must designate a money laundering reporting officer. Okay, money laundering reporting officer. Then report suspicious transactions directly to the National Crime Agency. All right. Now, when we say firms, firms must designate. We are talking of professional accounting firms. Do you understand? The audit firms, the professional accounting firm, the tax accountants, public accountant firms, accounting firms, and so forth. You understand? So these firms should have a dedicated money laundering reporting officer. Are we together?
Okay. Yeah.
So this person
ndo
should.
ndo ndo ndokwedu
Ondo?
ndokweduka kumoney laundering ndakadzidza kubhidhora ndakaita financial intelligence ndakatombosenza kureserve bank tichiita zvemoney laundering izvo.
Oh.
Mm.
Ende pabhindura ndopanguka ndopandoshanda kaiva.
ndo
Yeah, I'm the auditor there. All right.
oh
Yes.
okay.
Yes. So totofara katisangana nevana vedu.
aiwa bhindura ndokwedu kumba cheko.
Right. So that's fine. So I'm sure it is coming back now. You are seeing where we are going, right?
Yeah.
Good. So
Yeah.
this person,
Yeah.
this officer, should report suspicious transactions directly to the National Crimes Agent. So let's say you are doing an engagement, you are a team, you are doing a tax consulting exercise for a client, and you have seen that this client is doing something related to money laundering. What you need to do is to report to the MLRO of your firm. You tell that person in your firm, and he's the person who is going to report it to the National Crime Agency. I do not know in Zimbabwe what these guys are called. I've forgotten the name. Okay. And then you make the report. So, but there is this exam trap. Do not tip off the client. This is a criminal offense. So the moment you say, hey, we are suspecting that you are doing money laundering. This transaction, we are not okay with it. You are tipping.
Okay.
You
Okay.
will be tipping the client, and the guys, when those guys for money laundering come, they will pounce on you. The National Crime Agents will pounce on you, will pounce on the auditor or the tax accountant because of the tip off. So do not tip off the client. Is that clear?
Yeah.
Yes.
Understood.
Also, the general tipping off itself, whether you were honest to say, what you did here was wrong. All right, you have tipped them off. In your general advice, you would have tipped them off, and again, that is tipping off, and that is an offense. You're going to be arrested. So do not tip off a client, or to tell them that, hey, my junior or my MLRO has reported you. Please run. If you tip them off in that way again, it is also an offense. So tipping
Okay.
off is
Okay.
very wide. Huh?
I said okay.
Yeah, tipping off is very, very wide. So be careful. You in the exam, the examiner will test you in various angles. So be careful there. Tipping off is just an act of letting somebody know that what they've done was wrong. So if you let them know what they've done was wrong, in the money laundering sense, there is no advice because the assumption is that people know that money laundering is bad. You can only advise them when there was no evidence that money laundering was being done. So you just advise them generally. But when there was money laundering or suspected money laundering, The moment you try to educate them of a certain particular transaction, you are tipping them off, and in that regard, you'll be arrested.
Okay.
Are we together?
Yeah.
Yeah, because money laundering is illegal. Nobody's allowed to do money laundering. So if they do that one, money laundering is a different case. If they do it, there is no advice on money laundering. Please, oh, advice is only given before, maybe, what can I say? Before is a particular engagement, maybe as a general to just say, okay, fine, we have come for this. They've specifically hired you to just do money laundering education without auditing their books. When you are now auditing or you are now working on their books, and you have seen actually that there is something linked to money laundering, oh, please just report to your MLRO, and your MLRO should report to the NCA, the National Crime Agency, and let the National Crime Agency deal with the matter. Do not tip off your client for certain suspected or actual money laundering activities. I said my
Okay.
own. No. Okay. Now let's talk of something else. Something else which is a bit, sometimes tricky, sometimes, not fair. I feel this one is not fair at all. But
It's tricky. You're right. It's very tricky.
yeah, yeah, yeah. This is where UK takes sometimes, is discouraging to a lot of people because when they see these numbers, they are not okay with them. They're like some A-level permutations and so forth. Okay, but we can sell the gen together. Um, tax residence, tax residence determines the scope of UK tax. UK residents are taxed on worldwide income. What do you understand by worldwide income?
Let's say yeah, in the UK, and you're also doing some work in Spain or any other country besides
Uh-huh.
the UK. Yeah.
Uh-huh. Yes. So if you are a UK resident and you are doing work or you are earning income outside the UK, you will be taxed on those incomes. Why? Because everywhere you are, as long as you are a UK resident, you need to pay tax. So that's the worldwide income. Wherever you are getting the income, wherever part or whatever part of the globe you are in, you are going to be taxed. Is that clear? As long as you are a
Yeah.
UK resident. What about non-UK residents? Non-UK residents are not a problem, are only taxed on UK source income. Perform the tests in
Okay.
sequence. Now, these tests help us to determine if an individual has to be subjected to worldwide income or to UK source income alone. Do you understand?
Yeah.
So, test number one, the automatic non-UK test. The automatic non-UK resident test. Automatic non-UK resident test. So here, a person is resident if less than 16 days or less than 46 days if non-resident in past 3 years. So a person is resident if less than 16 days or less than
Mm-hmm.
46 days if non-resident in past 3 days. Hello,
Yeah. Yeah. I'm
Mandawuti, please.
listening. So We are saying here a person is a non-resident if they spend less than 16 days and less than 46 days if he has been a non-resident for the last three years, 3 tax years.
Okay. So this person is automatically non-resident if less than 16 days. If he stays in the UK for less than 16 days, he automatically is non-UK resident. Are we together?
Yeah.
He's automatically non-resident, non-UK resident if he stays or she stays for less than 16 days or for less than 46 days if non-resident in the past 3 years. So that's the automatic non-UK resident test. Right about that?
Okay.
So
Okay. Yeah.
number 2, automatic UK resident. An individual is automatic UK resident if he stays for greater than or equal to 180 days in the UK. Only home
Mhm.
is UK or working full time in the UK. So when I say or, it means that if any of these is met, if N is met, then he is automatically a UK resident. So if he
Okay.
stays for greater than or equal to 180 days, 83 days in the UK, automatically he's a UK resident, or only home is UK, then um, is a UK resident. If only his home is in the UK, then he's a UK resident, or he's working full time in the UK. That's the automatic resident test.
Okay.
Then we move on to the sufficient ties. If we are not convinced with this test, we then have to move to the sufficient ties.
Nice.
If automatic tests fail, match total UK ties against the total days spent in the UK. What do you understand by the ties?
The ties, these are the factors. I don't know how to explain it, but
All right, that's fine. So
uh,
there are 5 core ties. Are you still there?
yeah, me.
There are 5 core ties. Number 1, close family in the UK. Number 2, available accommodation used. Number 3, substantive UK work. Number 4, greater than 90 days in UK in the past 2 years. Number 5, spend more time in UK than any other country. This one is ignored for arrivals.
Okay, say, apo available accommodation, do you the only home in the Sergeant Banguna accommodation, personal is the
Yes.
only home, also it's a tie.
Yeah. We are saying the available accommodation which was used, was it in the UK and so forth. You understand? So we are talking of the
Okay.
home actually.
Okay.
Yeah. So now let us look at the days spent in the UK in the tax year. If the days are less than 16 days, if the days are less than 16 days, then previously
Okay.
resident all 5 ties. So if somebody stays less than 60 days, remember when we did the non-UK resident, the automatic non-UK resident, where we say that if somebody stays for less than 16 days, automatically that person is non-resident, isn't it? Remember, we
Yeah.
said that here.
Mm-hmm.
Do you still remember?
Mm-hmm. Yeah.
All right. So, uh,
Yeah.
all right. So we are also considering all the 5 ties, all the 5 ties. We are considering them here, but this person has been less than 16 days. So automatically, even if he was having a close family member in the UK, there was available accommodation for him. He used in the UK, substantive UK work. He was doing UK work there and so forth. What? But because he only stayed there for less than 16 days, so he's automatically non-resident and he only has to pay tax on that UK income alone. Maybe he went there to work as a consultant for those 5 days. So he's only going to be taxed not on worldwide income, but on specific UK tax. He's taxed on UK source income alone. Are we together?
Yeah.
So, not previously resident. So, remember these two columns. The first column here is if the individual was previously resident. If the individual here was previously non-resident, please look here. So, in all these cases, the person is automatically non-resident. Now, let us go to the second row. The person spent 16 to 45 days in the UK. Previously, he was a resident. So he becomes a resident if 4 ties or more are satisfied. So here we are saying if the person stayed in the UK for 16 to 45 days, please look at the ties now. If they add up, if he satisfies 4 of the ties, then he is a resident. Are we together?
Okay. Yeah.
Provided he was previously a resident. If he was previously a resident and this particular year he spent 16 to 45 days, he is a resident if 4 ties or more are satisfied. Perhaps he has got a close family in the UK, then he's available accommodation. He has got an available accommodation in the UK. He does substantive work in the UK. He spends greater than 90 days in the UK in the past 2 years, or spend more time in the UK than any other country. So any 4 of these, if any 4 of these are met, then he is a resident. But if he wasn't, okay, if he wasn't
Mm-hmm.
a UK resident, but he spent 16 to 45 days, and he was not a previously uh, a resident in the UK, then he still is non-resident automatically. Remember, there was a 183 days. A person is automatically a UK resident if he stays for 183 greater than or equal to 183 days. That still applies to some extent. Remember, this person had stayed only for 16 to 45 days and he was never a UK resident. So automatically he is still non-resident. But if he was previously
Okay.
a UK resident, then we then have to look at whether he satisfies 4 or more ties. All right. So here, this is why we ticked him as a resident. If he satisfies 4 or more and previously was a resident. Now, let us go to this third line, the third row, 46 to 90 days in the UK. And previously he was a resident. So he only has to satisfy 3 or more ties. If he satisfies 3 or more ties, he is a resident. But here, if he wasn't, please bear with me. If he wasn't a UK resident, but now satisfies 4 ties, he becomes a resident. If 4 ties, and these are the ties we talked about, remember, we are talking about. These are the ties,
Yeah.
right? So he needs to
Mm-hmm.
satisfy. If he satisfies those, then he is a resident. So this table is given in the exam. All right. Then,
Oh,
yeah, it's given in the exam. All right. Yeah, given it.
okay.
But it's good for you to be
Understand.
accustomed to it. Then
Yeah.
the person spends 91 to 120 days in the UK. Previously, he was a resident. Then he is a resident if 2 ties or more. So you can see that the more the days you are in the UK, the lesser the ties required for you to satisfy. Is that clear?
Okay. Yeah.
Good. So here, if you have been there for 91 to 120 days, you only have to satisfy 2 ties or more. Then, if you were not previously a resident, then you need to satisfy 3 ties or more.
Okay.
121 to 182 days. Remember, our threshold is 183 days. Okay, for you to be automatically resident. So 121 to 182 days, you are resident if you satisfy 1 tie or more. You are not. You are still a resident if you were not previously a resident, but you satisfy 2 or more ties. Why? Because you remember your days are now 2 men, isn't it? You have stayed for a long
Mm-hmm.
time in the UK, so you then have to satisfy only 2 ties or more. Then we can say that you are now a resident. Okay. Then, lastly, this one now we came back to the automatic resident test. If you stayed for 183 or more days, then automatically you become a resident. Okay, whether you have been a resident previously here or you were not a resident, you automatically become a resident. That's the sufficient ties test for you.
Okay.
Don't worry, we'll do an example together. So here are the key takeaways for this. Um, Taxation raises revenue and influences economic and social behavior. This is just a summary. The UK tax system comprises income tax. Like I said, this is our syllabus. National insurance contributions, capital gains tax, chargeable gains tax, that's its name, uh, inheritance tax, corporation tax, and VAT, value added tax. Tax law is primarily derived from legislation supported by case law and HMRC guidances. Professional accountants must uphold their objectivity, professional competence in UK, professional behavior, integrity, and confidentiality principles, and comply with anti money laundering obligations. UK tax residence is determined by applying the statutory residence test in the correct sequence. Consistent practice with ACCA style questions is essential for exam success. So now I think it's time for us to look at 1 or 2 questions just to put ourselves in the mood.
Okay.
For each of the following, explain whether it is an example of tax evasion or tax avoidance. Tell me what you think.
Can you, okay, for each of the following, number one, selling a capital asset in May 26th instead of to ensure that the gain is taxed in the later year, that is tax avoidance. Number two, altering a bill for 700 to read 7,000 so that the larger tax evasion, moving funds into ISO so that interest can be earned. It's tax-free. I think that's tax avoidance.
So which one is avoidance and which one is evasion?
So number one, it's avoidance. Number two,
Yes, correct.
evasion.
Oh, this
Number
one is
three,
evasion, right?
avoidance.
Yes, this one is
Yeah,
evasion, and this one is
it's
avoidance.
avoidance.
Yeah, that's correct. That's correct. First one, uh, let me just write it for people with listening disorder. So here we are talking of avoidance, avoidance, and this one is evasion. So I'm happy you are mastering these concepts very, very quickly. Uh, Moving funds into an ISA account so that interest can be earned tax-free. Yes, this one is avoidance. You are avoiding.
Avoidance.
Yes, that's
The ISA.
avoidance. Uh, huh. Okay, let us attempt this other question. Which of the following sources of income is exempt from income tax?
Mm. So what I would say here is salary, because salary is not. Sorry. Sources of income. Mm. Mm. Property income, it's exempt to CGT.
We're talking of
I
income
don't know if,
tax.
if I'm correct.
We are talking of income tax. Remember, I said property income is also part of uh, the non-savings income, which is also under the income tax regime. Property income is not exempt from income tax. You pay tax on the income from properties.
So is it salaries? I think it's salaries.
Salary is a non-savings income from employment, which is also subjected to income tax.
Yeah.
Uh,
And dividends also building society interest.
but now, if the dividends from shares, which are held in an ISA account, if the shares
Oh.
from an ISA, this one is exempt. Remember, I talked of the ISAs, where you say the UK,
Okay.
uh, I mean, government wants to promote uh, investments by individuals, so this one is exempt. Are we
Okay.
together?
Yeah.
The rest are subjected to income tax. Is that clear?
Yeah. Understood.
Maziona here kuti katesti kacho kanongouya so kanongofurika nyore nyore.
Notombonzwa zvakapusa.
Vakaipa. Which of the following taxes is not paid by a company?
Mm. Income tax.
Is not paid by the company.
Income tax.
Yes, income tax is for individuals. This one is for
Okay. Yeah.
individuals. Do you understand? But the
Mm.
rest ones, the companies do pay corporation tax. They do pay, national insurance contributions. They also pay VAT, but income tax they don't. It's for individuals. Sometimes the examiner might ask you which of the following taxes is not paid by individuals. Obviously, corporation tax. Iyo. Do you understand?
Mhm. Yeah, my question was
Eh?
my
So
findings.
when you are checking a recent tax computation from HMRC, you notice that they have made an error, which which has resulted in your client receiving a larger repayment than should have been made. So pamanga muchicheka imeme muchiita ma-tax computations from HMRC, pamacheka ma-tax computations from HMRC, you notice kuti HMRC made some error which resulted in your client receiving a larger repayment or refund than they should have been made. So client yako yakatodzoserwa mari yakawanda ne-revenue authority. What action should you take? Tudzo zvamunoita.
Should we not inform the HMRC of that?
Okay. Munoita saying, how do you inform?
To be honest, I'm lost, Baba.
All right, that's fine. So the position should be reviewed carefully to confirm that
Okay.
an error has been made. You need to, first of all, find all the facts. If the error has been made, you need to critically review the computations before you take all other steps. Then, after you actually satisfy yourself that an error indeed was made, you then have to conduct your client. You need to conduct your client for authority to disclose the error to HMRC. Remember the
Okay.
confidentiality principle. You first of all notify your client. All other issues except money laundering, you need to inform your client. Is
Oh,
that clear?
only except if it's money laundering.
Yeah, money laundering. Money laundering regulations are very straightforward on that. Okay? Exactly.
Yeah, clear.
Yes, you notify your client for their authority to disclose the error to HMRC. The client should be told um, the consequences of not disclosing the error. You must tell them, if we do not disclose this error, once HMRC determines that they made an error, they're going to be stiffer penalties.
Okay.
Exactly. And,
Yeah.
and these penalties include implications for interest and penalties themselves. So the payment, the repayment would be too heavy. If the client refuses, if the client refuses to allow the disclosure, it would be necessary to consider whether the amount is material. And if it is, whether you continue to act for the client. Is that clear, sir?
Yeah.
So atingosiye but tinotanga kumbonzwawo kuti vanhu vacho I mean amount yachona yakamirawo sei. Pamwe pacho vanogona kungoramba kuti hamusavaudza inenge ingori nhau ye50 pounds or less or something immaterial amount, then I don't think ungasiyirawo basa izvozvo. Anditi but kana uzoona kuti mari yachona iyi pakadoipa maibata mezazvo pane pakadoipa mudana saka munoonawo. So that was the thing I think which I jotted down, I noted down. Let me just see if I still have got some points. Okay, there's one other point here. If it is decided that it is not appropriate to continue acting, the client must be informed in writing. So, like I said, paunenge uzomboona kuti iwewe kuti ndirambe ndichishandira navanhu ava hazvichaita handiti. This is what you need to do. You put it in writing. I'm sure we discussed about this, isn't it?
Yeah.
Yeah, we discussed about it, that where you feel like, no, it's no longer palatable to continue the professional relationship, please put it in writing. Okay, HMRC should also be notified that you have ceased to act, but not the reason why you have ceased to do so. We talked about this again. It may be necessary to make a report to the National Crimes Agency under the money laundering regulations. Sometimes, if it even, money laundering can also encompass those, shady dealings in taxes. You understand? So if you are abusing tax systems, it also constitutes some money laundering issues, and you can as well inform the National Crimes Agency on that. Is that clear?
Clear, sir.
Good. Sure. We have done justice, but let me just look for a question that talks of, I think, those issues of yes, because this is something we normally find very, very difficult. The issue of days. Explain whether or not the following individuals are resident in the tax year. Yeah, this one is actually adopted from the Kaplan text. The Kaplan text itself, we give them credit on that. So we've got the first case there. We need to determine if the individual are resident in the UK in the tax year. Hello?
Can I try them and then you correct me?
All right. Okay, that's fine, sir. That's fine.
So first one, Dieter was born in Germany. He has lived in his hometown of Germany until tax year 2020 when he came to the UK to visit on 10 June. And that one is not. He's not a resident, right? The first one.
Why?
He has lived in his hometown in Germany until tax year 25-26 when he came to the UK to visit on 10 June until he has 183 days. He's lived in the UK in 180. I think. Need a calendar. Let me switch on my computers.
Mm-hmm.
Let me do it from this one. Yeah, I think because of the fact of that fact. Hello.
Hello?
The fact that he has spent over 183 days
Uh-huh.
in the UK. I think he's a resident.
He's a resident, right? Yeah, because if you
Yeah.
spend more than 183 days in the UK, then you are automatically a UK resident. Is that
Yeah.
clear?
Yeah.
Uh,
The next one.
uh, okay, all right. I wanted to take you to this. You are
Okay. Yeah.
resident if you are in the UK. You're automatically a UK resident if you spend greater than or equal to 183 days in the UK. Do you understand?
Yeah.
You own a
Yeah.
home in the UK or you're working full time in the UK. So I wanted us to know that. So this one is resident, right? This one is resident. Let me.
Mm-hmm.
This one is resident. Resident. What about the second one? Simone was born in France.
Simone was born.
She has lived in her hometown in France until the tax year 2025-2026 when she came to the UK to visit for a month. So she visited only for a month.
Non-resident.
And she had never been in the UK again, although she has got a close relative in the UK, but she never was a resident in the UK for the past, you know, 3 years, and she spent less than 46 days. So automatically, she is not. All right, she is not
Yeah.
uh, a resident. So this one is non-resident, right?
Yeah.
Let me just say non.
Yes.
Non-race. Let me just say non-race. Friday has always spent more than 300 days in the UK and has therefore been UK resident. Mm, let me just put this thing here. Fred has always spent more than 300 days in the UK and has therefore been UK resident. He gave up work on 5 April 2025 and on 18 May 2025, he set off on a round the world holiday. He did not return to the UK until 6 April 2026. Initially, he spent 5 weeks in his second home in Portugal, but then did not spend more than 10 days in any other country whilst he was away. Whilst he was away, he kept in touch with his wife and young children who remained in the family home in the UK. Is Fred a UK resident for tax purposes?
So I think Fred is a UK resident because of the ties. Plus, he's only been out of the UK for one tax year. Don't know if I'm correct. The family home and child.
Mm-hmm. Yes.
So I think he's a resident.
All right. Now, we just have to be very, very, you know, systematic here. So he gave up work on 5 April 2025 and on 18 May. So from 5 April to 18 May, how many days?
5 April.
5 April, that's
18.
let's say 25 days in April, and then plus 18 days in May. 25 plus 18, that's 43 days.
Yeah.
Hello?
Yeah.
So he was
Yes.
between, so that's it. That's between, let us go to, let us get back to our table. I don't know what's happening with this. It's now sticking now, saying that hey, it's time up. All right. So his stay is actually in this row. Okay, in this row. No, not that row. This one. This row. This is the row we are talking about. Between 16 and 45 days. That's 43 days, right? So he just needs, he was previously a resident. Remember, he was previously a resident.
Yeah.
So he is a resident if four ties or more are met. So now let us now look at the four ties. Does Fred have got close family relatives, family ties?
Yes.
Yes, his family is still in the UK. So this one is met. Uh, accommodation. Okay. There is available accommodation for the family in the UK. Yes. All right. What about the days in the UK? Hmm?
Uh, they should be less than
They are greater than
16 or less than.
no
Sorry. You can
days spent
continue.
in the UK. Well, I mean, substantive work
You
in
were
the
saying
UK.
something. Sir.
Substantive work in the UK is not matter because I can see and
Yeah. It's not
this
much.
one is not matter.
Mm-hmm.
What about greater than 90 days in the
Yeah.
UK in past 2 years? Akanga ari moga mu UK in the past 2 years, greater than 90 days. I even add one.
Yeah. He was there. He was there in
So
the past 2
that
years.
one is
Yeah.
met again. So
Uh-huh.
Tane three. What about spend
Mm-hmm.
more time in UK than any other country? In this way, is repeated.
No, that one is definitely.
Hmm?
No.
Why?
No.
Why? He has spent more than
Uh,
in the UK. Because he spent 43 days in the UK, but Anna was on among more days in other countries. Both I know the round the globe trip. You go let's say work chikepe. I ask you spend more time in other countries, but work right around the globe. And maybe I'm gonna be a town, country, won't spend maybe 5 days. Atina information here. Saga, we just presume good aka meet. Do you get my argument?
yeah. Yeah. You are right. You are
Eh?
right. I'm saying
Okay.
you are right.
And because and initially he spent 5 weeks uh,
Mm-hmm.
in his second home in Portugal, but then did not spend more than 10 days in any other country. What is 5 weeks? 35 days. Why bad?
Yeah.
Portugal, no matter Garissa Sterek. But
Okay.
35 days, 35 days is less than 43 days. Dzakaspenda UK and saka UK
Mm-hmm.
akagarisa kwa zvakawandisa and ndokwakanyanya kugarisa. Saka in that case, he is arrested. He met the four ties. Is that clear?
Yeah. Yes.
Ndara,
Toda kujaira. I will get this. I will get this recording soon. Eh?
eh, it's okay.
Yeah.
Then Olga, a housewife, has previously visited the UK on holiday for 30 days in each of the last 5 years. and was not UK resident in those years. Can we say Olga is a resident?
Let me see.
All right. Ichirigo in America. On 6 April 2025, she purchased a holiday cottage in the UK. In the tax year 2025-2026, she visited the UK for 80 days, staying in the UK home apart from the 2 weeks when she stayed with her 17-year-old son who had come to study in the UK. For the remainder of the year, she lived in her home in Germany. Can we say Olga was a UK resident?
No, I don't think she is.
Hmm?
I don't think she is.
We say she is automatically non-resident.
Yeah, because in the last 5 years, right, she has just spent 30 days in a year, which is less than 45 days. And also, this is a holiday home. We can't say this is a main primary home that she's staying. And when she visited, she spent less than 80 days. So I think she's non-resident.
Okay. So Olga, let us get back to the table, but in 2025, 2026, she visited the UK for 80 days, staying in her UK home, apart from the 2 weeks when she stayed with her 17-year-old son who had come to study in the UK. Mm? So almost about
Okay.
94.
Yeah, 94. Yeah.
All right. Okay. There is this explanation. Olga has spent 2 main days in the UK in the tax year to be automatically considered non-resident. That is greater than 46 days. And although she has been in the UK for less than 91 days, she does not work full time overseas. Why are they saying she was for less than 91 days? All right, okay. She visited in the tax year, she visited the UK for 80 days, staying in a UK home apart for the 2 weeks. Okay, so these 2 weeks are inclusive of the 80 days, right? They are in these 80 days.
Yeah.
They are simply saying that pai gara ke pamba pake but and the 2 weeks zagambo gara nishi nemana wake I study imomo and it. So we are talking of 80 days, which is less than 90 days. Okay, fine. Less than 91 days. She has not spent sufficient days in the UK and has a home in Germany. Therefore, she is not automatically UK resident. Or we can't say she is automatically non-UK resident, but at the same time, she is also not automatically UK resident. So we then have to go to the sufficient ties test. Adiriga.
Yeah.
So as she
Hey.
spent, so if we go to the sufficient test, the table, she spent between 46 and 90 days, right? Because we are talking of 80 days, right? So
Mm-hmm.
that's 46 and 90 days. So she's resident if um but she wasn't previously a resident, right?
4 ties.
So she
Yeah, she
needs to
wasn't previously a resident.
so she needs 4 ties to be considered a UK resident. She needs four
Yeah.
ties. Can she get those 4 ties?
No, she can't.
She has a close family member in the UK who is the son. Okay, so the first one is
Mm-hmm.
met.
Yeah.
The first one is met. What about the second one? Available accommodation used. Does she have a UK? Yes, she has got an accommodation, a holiday cottage there.
Mm-hmm.
I mean, there's a home in the UK, right?
Yeah.
Yes. My let me change the color of my ticks. Okay, so we are saying the close family is in the UK, which is fine, and there is accommodation available. Uh-huh. What about substantive work in the UK? No, she's not working in the
No,
UK. Greater than 90 days in the UK. Yeah, that was a trap there.
no.
No. uh,
She fell short of 90 days.
yes. Then spent more time in the UK than any other country. Spent the rest of the year in Germany. So this one can't be. So she only has got two ties. So therefore, Olga is not a resident, isn't it?
Yeah.
Remember them. Sometimes we just guess.
I wonder, but
Mm, so Olga is non-resident, non non-race. So zvinotoshandika zvinhu zvacho so but ndo madhiri achiwaya. Which of the following is an indirect tax? Some student is bothering my
but
inbox.
tisadarikidzira titadarikidzira tounonga wakumirira ise.
Yeah, yatopera vanhu. Okay, so aba vatiri kutenderana kuti VAT and ndo indirect and
Yeah.
because mamwe esaya anobhadharwa
Mhm.
nema-taxpayers. So apa that's correct. Yes, that's VAT. I wanted to how many questions left? Okay, this one. Byron and ACCA member discovers that a client has deliberately not declared a source of income on their tax return. Which of the following statements is correct? What do you think is the correct answer? Client Aramba could declare source of income on their tax return. What should be done? The member should immediately notify HMRC of the error. Is that the correct position? B, the member should notify the
Yeah.
client of the error and explain the potential consequences before considering ceasing to act. C, the member must immediately make a report to the National Crime Agency due to the possibility of money laundering and notify the client that they have done so. The member should cease to act for the client if they refuse to disclose the error and advise HMRC that they have ceased to act and the reason why. What is the answer?
Should it not be B?
Member should notify the client of the error and explain the potential consequences before considering ceasing to act. Yes, that is the answer. But why D is? Why do you think D is C and D are incorrect?
So for C, the member must immediately make a report to the National Crime Agency, possible money laundering, and notify. So confidentiality, I think this breaches the confidentiality issue if we just make a report straight to the officials.
Mhm.
And D, that the member should cease to act for the client as they refuse to disclose the error and advise. Same thing, confidentiality again, breached.
Yeah, because we are still at the source of income on the return can't really be a money laundering issue, although to some extent, yeah, money laundering can be inferred, but I think it is better to uh, explain. You need to let the client know that it's vital that we need to disclose the source, uh, and the then if they refuse, maybe you need to then dig deeper to see if the source can't actually be found. then that's when, after that, you then consider notifying the NCA for any money laundering suspicions. But the best answer here should be B. You need to notify the client of the error and explain the potential consequences before ceasing to act. So that was our answer there. That's which was let me take that one for people with eyesight challenges. Yeah, that's the correct answer, B.
Mhm.
Now, this question, did we do this question? This these two questions, and then we finish. Which of the following um which of the
Mm.
following is statutory legislation? Statutory legislation can be seen by having an
So
act.
statutory,
Mm.
yeah, yeah, we did that in interpretation of statute.
So the Income Tax Act, right, is actually the statutory legislation. It is an act of parliament enacted by the parliament. Um, so that's this one is actually an act which has been enacted by the parliament, and it is the statutory legislation. The rest here are not. Okay, good. Any questions on this?
Now,
Now, let's do this last question. Pierre was born in France. He has been working full time in the UK and has been UK resident for tax purposes for the last 5 years. He has been a resident for the last 5 years. He plans to return to France in the tax year 2025 2026. Assuming he has two ties in the UK in the tax year 2025 2026, what is the maximum number of days that Pierre could spend in the UK without being treated as UK resident in the tax year 2025 2026? How many days maximum?
uh, I think it's 90.
Why?
Hello?
Why are you saying 90?
So, so I saw this question when I studied yesterday.
Oh, you saw the answer yesterday. But why are
So,
you saying so?
okay. So he was born in France and he has been working full time in the UK and has been a UK for the past 5 years, right? So he plans to return to France. So assuming he has two ties in the UK, 2025 and 26, what is the maximum number of days could spend without being treated as a UK? So he was sort of like a resident for the past 5 years. So the minimum is 90 days. If we go on that table, if I'm not wrong.
Mhm. Educate us
Mm,
on this one.
So if we look at 46 to 90 days, for the person to be a resident, he needs 4 ties,
Mhm.
right? So he does not have the 4 ties. If we look at the question, so
Mhm.
he will be a non-resident.
Mhm.
Yeah, that's my defense.
He has got two ties. The person says he's got two ties.
Yeah, it's got 2 ties.
Assuming he has two ties with the UK in the tax year
Mhm.
2025, what is the maximum number of days that Pierre could spend in the UK without being treated as UK resident? So obviously, we need to get our answer from this. He was previously a resident. This remember, right?
Mhm.
and he has got two ties. So
Yeah.
obviously, and it, so if you spend more than 91 days and you have got two ties, then you are arrested. So obviously, this guy, this guy needs to only spend up to 90 days. Okay? Because if he spends
Mhm.
91 days and he has got two ties, then he becomes a resident. So if he doesn't want to become a resident, he just have to spend up to 90 days. You were right, but you didn't explain your answer very well. You
Yeah,
understand?
I know. When I was reading on my own, I was sort of like cramming. I didn't have a great understanding. That's this table, right? Even the guys that I did with the last time, they didn't understand. They didn't show it to me the way you explained it to me. So I feel like this topic, if I revise again, I'm gonna understand it better than last time. Because the way you explained this table to me today, it's the first time someone has explained this table to me. So I now understand how it works now.
All right, sir. I think we have done justice to our first question. I mean, our first lecture, and I look forward to see you. Like I said, I want you. I'm going to send you all the videos for this paper, and we are only going to meet. I think we need to meet. Let me just say in 2 weeks' time for corporation tax because I want to prepare the video for corporation tax, right? And I'll
Mhm.
send you all the videos which you need, which cover inheritance tax, everything else, the
Mhm.
VAT, everything I'm sending.
Mhm.
Then we only have to make a video on corporation tax. So I guess that in the next 2 weeks you should be through. Is that
Yeah,
clear?
you send me everything. Because even today, I'm just gonna go in town and do things that I need to. And then I come and I sit. So I'm
Yes,
gonna revise what we did today, and I'll start.
yes.
I think
But
as
this
soon as
video,
you can just send me everything.
okay, but this video I'm going to upload it on Monday because I do not have Wi-Fi. The bundle was solo,
Oh, okay.
but yes, but on Monday I'll upload everything. I'll be nearer to some Wi-Fi spot,
But
and then after
there's
that,
an option. Is there an option to record on my side, Jenny?
I think I'll look for that.
Ndatotadza kudhara ndakadaita tatozvita kudhara because kuno kuisusu wifi haisi nyaya pamba pega pega pese pane pangori nei.
Oh, my Wi-Fi ipupuwe that side.
Aiwa, kuno chiri chisina basa uncapped 400 500 uncapped kuzimbabwe ndakamenge ndiri kuona kamboita mamanzi ndiriko wifi inodhura.
Unazvionaga.
Pamwedzi unotoda wifi ye 150 kafanike yeikoneti yani.
You see now, so pakaipa. So I'll send you tomorrow. Then I think when we start another lecture, we'll need to see if you could record as well.
Yeah,
Um,
zvinoita easy.
yes, that's fine. That's fine. Say, so I'm going to send you everything, and I think uh, our next lecture should be. Let me check the calendar here. Another, we just want to do it on Saturdays because on Saturdays
Okay.
I'll be a bit settled.
Okay.
So yeah, I think on the let us just say first on the 1st of August, you would have actually done everything. Then I'll in midway, I think I will find some questions for you on those topics which you would have covered, which I will send so that you do the assignment. When you see an assignment link, you can even I mean ignore it because when I send you, maybe you also receive an assignment link, but ignore those assignments. Now I need to update one or two things. I will send you some questions actually around the 21st of this month. I'll send you some questions tackling all the other aspects except corporation tax. Corporation tax, we want to dedicate it uh, for the 25th of July or the 1st of August. Somewhere there, we will have a lecture. Actually, on the 1st of August, we need to have a lecture on that one. so that we finish everything. The rest has been prepared, but corporation tax only. The videos where it had some errors, so I want to redo them. So thank you so much, Say.
Okay.
Yes,
Thank you.
thank
I'll
you
be
so
in
much.
touch.
I'm going to send you everything.
Okay.
All right,
Have
bye.
a
Have a
great
good
weekend.
weekend. Bye.
Bye.